Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 24th. Hope you guys are having a great day thus far. We got a couple items here on the weekly calendar, and we'll start off with the weekly initial jobless claims. Last week was actually a rise lower. Last week was an important date because that week was the number they're going to use in the BLS's jobs reports coming out for January in about another week. It was a strong number. It was at 213 last week, but it was revised about 1,000 people lower. Uh, so that was an important week. So that could easily give us a strong jobs number for the month of January once we see those that data next week. Forecasts were calling for the for last week to be oops, sorry about that, for to go up 218,000, but it did the exact opposite. Went down to the lowest number I've ever seen. Definitely lowest. First time it's reached under 200,000 since 1969. This at 199,000 people applied for unemployment. So this is an extremely low number. We haven't seen this number. At least I've never seen it in my lifetime, and I believe that what I understand, this is first time this is it's been below 200,000 since 1969 is what I was hearing earlier this morning. So, wow, that just tells you the market here is still strong so far. Not to say that it's going to continue that way, but at some point it will slow down. But again, it's still showing strength in the economy right now. We also got some data coming out from market PMI. So we got right here is the market manufacturing for the month of January. So in December we had a 53.8. Anything above and these markets indexes, it's anything above 50 is called optimism or expansion. So we expanded manufacturing expanded on their index level at 53.8, and it grew in January to 54.9. However, on the non-manufacturer, also services, it's also called the market services PMI. December was at 54.2, and it has slight tick lower to 54.2 here. And then last but not least, we got leading indicators. So in the month of November, we saw 0.2% growth, but in December it pulled back by 0.1%. So it shows some strength. Leading indicators could be kind of important because it could kind of show us like 6 months down the line where the economy is moving, and obviously we would like to see growth versus pullback on there. And that's been on the macro level. That's where investors have been kind of concerned of late. And so speaking of such, we're going to headline news. Stock market is currently up, but earlier it did start lower because based on comments by Wilbur Ross, who's involved with these trades with China. He's the Commerce Secretary, and basically he said that the comments that he basically stated were the trade talks between U.S. and China were miles and miles apart. So that kind of put a little pessimistic mood into the thinking of that things may not get done by the March 1st deadline, and that maybe Trump will raise the tariffs on China from 10% to 25% on $200 billion of goods. So again, that would be so. It kind of put them in a bit of a sour mood, so it started the morning off that way. We do got Q4 earnings reports coming out, and yesterday was a good day for it. So today they're kind of weighing the good economic reports that we're seeing for the most part, earnings reports compared to the macro, and so far we're on domestically we're looking okay. Also, comments by Mario Draghi, who's the president of the ECB, came out that they're looking at risk balance over in Europe, and basically in Europe has said they're even. Now he's saying to the downside, the risks are going to the downside. So basically, they're feeling a little bit more of a slowdown over there, and that's of course weighing a bit on investors' minds right now. So this is all kind of helping out, as you'll see here on the mortgage-backed securities here. So yesterday we did break below this 25-day moving average. We did test it. We pulled back. Today we're like right at that level right now. We're kind of in between. We're going to be right on the top of the line here. As you see, it's going both ways. And we're kind of at this line here and kind of between that and the Fibonacci level. So again, it's going to be a tough day. Stocks will be key in this scenario here. So if stocks continue to rise, it's going to hurt mortgage-backed securities and probably push us lower. So we're starting to see a little bit of a trend here on a downward here. And the next level here will be the 200-day moving average. Which, as you can see here, is about probably 225. So we got good, almost 50 base points, which translates to a half a point in pricing for interest rates. So if you got a no point loan out there, that's can easily translate to a half a point if we hit down to this direction here. Here's the 10-year Treasury. As we saw, we broke above this 25-day moving average yesterday. Today we started there, but we're right now hanging below. We're down to about 2.72 range, I believe it is right now. We're about 2.72, and just below this 25-day moving average. Again, we're getting kind of pressured in both directions here, and we'll kind of have to see. Stocks are going to kind of dictate. So if stocks improve, this will improve. We'll probably break above 25-day moving average, whereas the mortgage-backed securities will do the opposite, and rates will rise as a result. So right now we're up about 9 basis points. Not quite yet enough for improvement in interest rates, but if we can get, depending on the day, we could potentially get better. But again, it could go the opposite direction, as I mentioned. Stocks were kind of negative earlier and now are in positive territory, so we'll have to kind of see what the final mood for investors will be. All right, so that pretty much wraps things up. If you guys want to get any other further data, I do post on Twitter during the daytime here, and if you want to get the market close or anything else that pops up, I'll be putting on Twitter. You could just go ahead and follow me at Mike Bjork on Twitter. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye bye.